All right, what is up, traders? What's up, tycoons? Super excited for today's video. We're going to talk about treasury yields, right? We're also going to talk about TLT, of course, and there's a big reason we have to talk about these, mostly due to the situation in Iran, or I'm sorry, in Israel and Palestine, and the Gaza Strip and everything. We'll talk about that more. We're also going to talk about some pre-election seasonality. Then we have to take a look at utilities, and we're going to explain and kind of help you guys understand the massive sell-off we've seen in utilities. We'll do a comparison to the S&P 500 versus the utility sector. But as always, the content provided on this channel is for informational and educational purposes only, and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. I do want to mention, if you're new to the channel, I started a completely free newsletter called Investment Intelligence, giving out free, valuable finance content every single week. And I also try to sprinkle in some trade ideas. This was a trade idea we had on Tesla over a month ago, highlighting some of the conditions and the two things we are looking for on the chart. And you can see that that trade played out very nicely and returned some very juicy profits. All right. Also, a trade idea on ExxonMobil. Energy has been a big topic lately here. We went over the conditions we were looking for in the RSI and MACD, and we got both of those on the RSI and MACD. But not every trade idea is also a long idea. Some of them are also shorts, right? This was a short idea on Stanley Black & Decker, ticker symbol SWK, highlighting where we thought the stock would come to. And you can see how that played out there as well. So sign up for that if you're fans of free, valuable content, especially related to finance and the markets, and also if you enjoy free trade ideas. Now, let's talk about retail investors continuing to buy Treasury ETFs. All right. Recently, we saw about $800 million almost flow into long-term Treasury ETFs. So the green bars are long-term, and then yellow is going to be medium-term, and red is short-term. And you can see, really, since the start of 2023, there's been a significant incline, okay, in Treasury ETFs, right? And these are going to be things like TLT, EDV, IEI, IEF, HYG, et cetera, et cetera. Okay. Now, who is this affecting? Why is this important? Okay. We're going to talk about that a little bit more, but it really affects the utility sector. Okay. So when you take a look, the ratio of S&P utilities relative to the S&P 500 has fallen to a new all-time low. Now, a lot of people are scared about a recession and worried about a recession. Why aren't they playing defensives? Why aren't they buying into utilities? Well, we can see that they're actually buying into Treasury ETFs. And the reason being is because a lot of utility investors, oftentimes, if they're not only just playing defensive, there's lots of dividend stocks in there. Okay. And, people are looking to play off of that dividend income. Well, there's always going to be the risk factor. Okay. And with Treasury ETFs, you can now get risk-free, quote unquote, unless the government defaults on its debt, but you can get risk-free high yields now. Okay. We're seeing record yields, especially in short-term yields. You can get, really amazing rates, and even long-term yields are very attractive right now. So people are piling in to Treasury ETFs and selling hard in the utilities sector. Okay. And that's very evident when you take a look at the S&P 500. It's up 12%. All right. Year to date, basically from 2023. And then you look at utilities down almost 20%. So, we're seeing a really big sell-off in utilities, and we're still seeing a big sell-off in the Treasury market, and, things like TLT, but people would rather buy something like TLT right now rather than utilities. And that's very evident. Now, until this cycle, bonds have rallied at every Fed pause. Assuming July was the last hike, bonds are not behaving anything like they have in previous cycles. And so basically all of these lines right here are going to be representative of different time periods in the times that the Fed has paused. But you can see that this is where we're currently at. Okay, this line right here, and we're still seeing a massive sell-off. Now, one reason for this is that there's record amount of short positions. Okay. And you have, famous people like Bill Ackman putting on massive short positions on US Treasuries. And just overall, I've highlighted in previous videos the massive amount of short positions there are on US Treasuries at the moment. And this is helping to send yields higher. Okay, now the Fed has also spoken about its higher for longer narrative, suggesting that even if they do pause, maybe they're just going to hold those rates there much longer. than people are expecting. And of course, with some of the recent job and labor reports that have come out, people are suggesting that the Fed has maybe one more rate hike to do. So those are a lot of the factors contributing to why we've still seen this rare instance where bonds are continuing to sell off. It's really crazy. Ever since COVID happened and the pandemic, we've pretty much been living in a market of firsts. And what I mean by that is you're seeing all these instances where it's the first time that bonds are continuing to sell off, right? It's the first time, back in the bear market that we had the biggest, bear market bull trap, essentially, where, the S&P rallied really hard into the summer. And then ended up selling off again. And there's all these different instances where it's really the first time that this is happening. And we're seeing that now leave not only the equity market, but head into the bond market. Okay. Now, one thing to consider is the situation and, basically the geopolitics of things right now. Okay. This whole situation with Israel right now could be a factor that actually drives the Fed to cut rates. If they're really worried about oil spiking and let's say energy prices really start to spike due to this whole situation, they've already popped, but if they continue to go higher, there's a lot of factors behind this that really could potentially end up having the Fed close or not close, but rather start to pause and cut quicker than markets were anticipating because of the geopolitical factors going on in the world right now. And this could cause a massive short squeeze, in my opinion. All right. And we're going to have to see if that plays out or not, or we're going to have to see if this is a head fake. Okay. We don't know how things are going to develop. It's very early in the stage. So it's very risky to try to make a call so early in the stage and place your bets so strongly on one side versus the other. But some other important data right here. Are you likely to increase or decrease equity exposure over the coming days and weeks? All right. And percentage planning to increase was around 36%. So that's very low, all right, to equity exposure. But are you more likely to increase or decrease bond portfolio duration over the coming days and weeks? And only 12% had a plan to decrease bond portfolio duration. So basically what you're seeing is that 88%, all right, according to JP Morgan, plan to increase their bond duration. All right. So again, we're seeing lots of data showing that retail and investors are piling into Treasury ETFs, but there's been a lot of factors that have still continued to have these Treasuries drop, right? And I kind of explained some of those factors. I mean, on top of that, you have Janet Yellen flooding the Treasury markets. Right. Lots of different factors. We still have quantitative tightening going on versus quantitative easing. So, it's been a very difficult environment to navigate, but you have to keep your game plan in mind, right? Are you buying TLT or TMF or some of these bond ETFs for a short-term play, or are you buying them to hold them for a few years because they have attractive yields and you think in the coming years in the future, if not sooner, the Fed will start to cut rates, right? These are the questions that you have to ask yourself, and you have to come up with a game plan before you dive into these things. Now, when we do some technical analysis on TNX, okay, we had some price targets here. Okay, we had some price targets here looking for our wave 5 top. Now, this is a wave 5 of 3. All right, and we're going to be looking for a wave 4 pullback now. Okay, these two arrows right here, these are gaps on the TNX, on the 10-year Treasury. So there's a gap under 4.4 and there's a gap under 4.6. So these are going to be some of the areas where I'm targeting as a potential wave 4, basically anywhere from about 4.3 to around 4.6 is where I think the TNX is going to pull back. Now, this is the bullish count, and this is the bullish scenario suggesting that it is actually going to continue going higher and head up to 5%. Right now, that may not be what some people may want to hear, but I'm just following the analysis right now. And it seems that, the geopolitics happening in the world right now are the driving factor pushing this lower, right? After we hit the peak, we came up here, peaked, we started to get a pullback. And, right now the TNX is basically battling 4.715 as a resistance. Okay, you notice that we had this very strong bullish channel right here. We started trading outside of the channel. Okay, oftentimes these are signals that things could be getting overbought, and we're getting a breakout retest. We'll see if it continues going higher, but I do favor it pulling back. If things get worse in the world with the whole Israel situation, and it really starts to affect some other factors in the economy, then it's very possible that the Fed could start to, hint that they're going to cut rates sooner, or, basically tell us that they are pausing and they plan to just keep things paused. And, it could get rid of this bullish count, right? We could actually come back down and start to reverse in treasury yields. But remember, there's a lot of other factors going on behind the scenes. And, until we get confirmation, right, for now, things are just following the analysis. And after our wave 5, we should get an A, B, C, right, down to, again, targeting that, below 4.4 to below 4.6 is where I think we're going to get our wave 4, ultimately for another rally in treasury yields. But things can change over the coming, next month or two, and that's going to have a lot of factor into how this analysis plays out. I'd love to hear your thoughts down below. Is the treasury yield actually going to get back up to 5% when we're talking about the 10-year, or is the top put in, and are we going to continue going lower now, especially with the situation happening in Israel? Now, this is our TLT daily chart. Okay, our wave 4 was this triangle pattern that we had forming here where we were squeezing through, and our wave 5 should be a 5-wave move to the downside, right? 1, 2, 3, 4, 5. Wave 3 extended really, really far right here. But we are in the process of looking for a wave 4. This whole situation that we have right here going on in Israel really could cause a massive short squeeze if people start dumping and closing a lot of their short positions in US Treasuries. Okay, today we're actually seeing TLT is down about 1% at the time of this recording, early in the market, right around market open. And, if we just continue to see people close their short positions in treasuries, that could cause, treasury yields to drop. All right. And then also cause, treasury bonds and treasury ETFs to start to rally. And that kind of aligns with the analysis that we're looking for a wave 4. Now, these blue boxes here are what's known as gaps on the daily time frame. These gaps, they do tend to fill about 90% of the time historically. The big question is when. Sometimes they fill very quickly in a couple days. Sometimes they take weeks, months, or even years to fill. So I have these charted up, and I wouldn't be surprised if TLT goes back up to the $91 area, maybe even potentially all the way up to about $93 for this wave 4. Okay, and that would basically align with TNX getting its wave 4 pullback to the downside. That would be TLT's wave 4 bounce to the upside. And then we would get a final leg down for TLT heading down towards that $80 range. Could be about $79 to $82 on TLT. And I'm just going to stick to that analysis until things change, right? I mean, we're looking for the wave 4 bounce up right now. We're looking for the wave 4 bounce down right now. There's a lot of news and a lot of factors going on that will affect these and could change these analysis, but there's no reason to change something that isn't broken yet, and these have been working pretty good. So I'm going to stick to these, and we'll see how things play out. I'm really going to be paying attention to see if there's going to be any signs of a short squeeze in the TLT. As I mentioned many times, there's so many massive amounts of short positions, and if things really continue to escalate over there, it's very possible that a lot of these people will close their short positions, and a lot of investors will actually seek a flight to safety, and that will end up driving treasury yields down. So we'll have to see how things play out in the future. Thank you guys for watching this video. Smash that like button, subscribe to the channel. We have one more thing right here. All right, a few more things we're going to go over and talk about, but the pace of CTA unwinds in the S&P 500 futures have been the largest on record. Almost 40 billion of SPX was sold over the last 5 sessions. And then what did we see on Friday? Well, Friday we had that jobs report. The futures were down massively, and I think that really we just saw a massive amount of shorts getting squeezed out of the market, right? Or at least taking profit. Okay. It doesn't necessarily have to be that they were squeezed. Maybe new money shorts were squeezed, but there was definitely plenty of profit. The market has been trending down. And more recently, the past fewer days, we've seen things start to go up and start to rebound a little bit. And I think that that's been a lot of short covering. Now, I can't tell if it's short squeezing or just short covering and short, profit taking. But again, Friday we had a really, really red open, due to the NFP. And what did we see? We saw a tremendous rally afterwards. Monday, what did we have? We had the big gap down from the whole, war situation going on in the Middle East. And then what did we see? We saw those, get covered as well. And we saw we had a really big rally Monday as well. So, these are some of the things that you have to keep in mind. All right. And it's not going to be as easy as you think it is. So, you want to have some patience. All right. You don't want to go all in on one thing one day and then the next day, feel like, all right, why am I in this trade? Now I have a completely different idea. If you don't have the same thesis that you had a week ago, that you have now, then maybe you shouldn't be getting into positions until you can really build, a strong thesis behind your positions. Now, these are buybacks right here. In buybacks, I think are going to play an important part to the end of year rally. I'm expecting an end of year rally in the stock market. I've been expecting that, and in August, I was trying to warn people about September. And of course, we've seen a pretty big correction. All right, I was talking about the big tech correction, and now it's time to shift gears and try to talk about what's going to happen towards the end of the year. And in my opinion, we are going to have an end of year rally, and I think we're going to break the highs of this year and potentially retest or go above all-time highs in the S&P 500 buybacks. So basically, corporations have returned from the blackout window on October 23rd. They become very busy at the end of the year, and November/December are the best 2 months of the year. These buybacks, investors are going to, and Wall Street is going to like these announcement of buybacks. They're going to, appreciate these, and this is something that's going to be, in my opinion, a bullish catalyst. But one of the biggest factors that I've been bullish for end of year rally and really bullish on the stock market overall has been pre-election seasonality. Okay, now there's lots of different seasonality things to look at, but the midterm pre-election seasonality did a great job of calling the bottom in October. Ever since then, I really started paying more attention to, election year seasonality. Now, this talks about how pre-election years tend to bottom in late February. We can see that we're, if you look at the S&P, we're well above the February price levels. But what I really want to highlight here is this is the end of year rally that I'm speaking of, right? So you can see heading into November, kind of late October, early November is typically when we get to our next bottom. And then we see a strong rally to continue the end of the year, and we break through the previous highs and previous resistance levels that we had in December towards the end of the year. So, this is just one of the things that is driving my opinion. Okay, and it's data based on pre-election seasonality. This is another pre-election chart right here. And this doesn't have the current year performance, but when I talk about the midterm cycle, right, this is October-ish over here. This is October, and you can see that typically you get a bottom in the October. And if you look, the S&P 500 historically has always been green. It's always been positive 6 months and 1 year out from the midterm election date, right? And so that was in October. And you can see that that's when the stock market actually bottomed in this time period, had a strong rally, and then we followed the pre-election seasonality pretty well. This is basically where we're at right here, okay? We're approaching, that October-ish bottom right in through here, and we're going to be expecting a pretty strong rally to finish the year. Now, your election cycle year isn't really the strongest, right? I mean, it looks like it's going straight up right here, but when you look in relationship to, the magnitude of the slope, in the pre-election cycle versus the magnitude of the slope in the election cycle, it's not as great, right? The pre-election year is pretty much one of the most bullish years in the presidential cycle for the stock market. And you can see your midterm cycle is pretty much normally like the worst, right? So it's no coincidence that we had such a bear market in basically the worst performing time of the presidential election cycle. We're going to look to see if we can get this pre-election cycle end of year rally. Now, when you take a look at the round trip, all right, basically this is the blended forward 12-month EPS estimates for the S&P 500. They've come back to their peak reached in mid 2022. So they've basically done a round trip, right? And this is from Bloomberg. You can see the S&P 500 index EPS. All right, this is June 2022. All right, and we've basically come around and done a round trip over there. So you can see that the forward 12-month EPS estimates have been on a rise basically since 2023 started. All right, they basically bottomed out here in March during the banking crisis, and then we've continued to see them rise afterwards. Now, if you enjoyed today's video, you can actually use the Ko-Fi platform using the link in the description to request your own specific YouTube video on the topic of your choice. I do these viewer requests. I try to do them as soon as they come in. We've already had a few viewer requests come in through the Ko-Fi platform. You just click on that commissions page. And in that commissions page, you can also actually book a one-on-one personal session with me, right? There's a 30-minute session or a 1-hour session. I do these coaching sessions every single week, and we can work on scheduling a time that fits together for us. I can do late night, I can do early mornings. I've many of them have been with people that are, maybe retired, living in a foreign country. Some of them are also foreigners. I've had people in Germany, I've had people in Thailand, Asia, I've had people in Canada. All right. Basically all over the world. And of course the US, so hit me up. All right. Hit me up on Ko-Fi. Use the link in the description to go to Ko-Fi. That's where you guys can request a specific video. All right, and I'll make a video tailored to your needs on the topic of your choice. And then if you ever want to do a one-on-one session, use the Ko-Fi platform to go ahead and book those. And if you ever enjoy the free valuable content I put out, you can always click on the buy a coffee button. It's basically a way to leave a tip or donation to the channel for the free valuable content I put out. Don't forget to sign up for the free newsletter, okay? Completely free, heading straight to your inbox. Really good finance content, as well as some free trade ideas. There's a link in the description for that as well.